Alright, so this is from a previous video and I'm going to keep it up there, but we're not really going to refer to it much. I just need to talk to you about balance day adjustments. Now, you'll remember that this little bit of working here said that we paid insurance of $1,200 on the 1st of the 5th, but our matching principle tells us that we get 2 months of benefit in this financial year and we get 10 months of benefit in this financial year. The problem is that we record this entire transaction as an expense on that date, on the 1st of the 5th. So what we then need to do on the 30th of June is a balance day adjustment, which changes it from an expense that was much smaller and saves the rest as a special thing. Now, the balance day adjustments can happen in balance day adjustments create 4 different accounts. They create, sorry about the squeaking, pen must be dying, prepaid expense. Now, the example I've given you here is a prepaid expense. You're prepaying your expense for the next 10 months. Prepaid expenses are assets. Weird. Expense, asset. The 2 months here were used in this period and we count them as an expense because they've been expended. But on the 30th of June, the next 10 months, that's an asset. That's something we've got in our pocket that we can use over the next 10 months of insurance. So that's going to be a prepaid expense, which just happens to be an asset. Now, you also have something called accrued revenues. Now, I'm not going to go through them and explain all about what they are, but you're going to have to trust me on this. They're also assets. Now, we also have the opposite of that. So we have prepaid revenues, which are obviously going to be liabilities, or maybe not obviously. And then we have the last one, which is an accrued expense, and that's also a liability. Liabilities. Well, okay, that's it. There are going to be 4 different balance day adjustments that we do. When we do them, we create these 4 different accounts, and they're both, well, 2 of them are assets, 2 of them are liabilities. Now, one way that people like to remember this is to say that PEARS, pairs, are assets. All they're saying here is prepaid expenses and accrued revenues are assets. If you can remember that those 2 are assets, the ones that aren't those, prepaid revenues and accrued expenses, must be liabilities. Okay, we're going to actually do a balance day adjustment in our next video dealing with prepaid expense.